Oh my gosh,
We're live.
we're live. Can you believe it?
Let's do it. Look at everyone in here. 45 attendees already. I love this.
And these are all the people that are early. So you know that these are the true professionals.
I see a lot of names in here that I know. This is a good group so far.
Are you surprised?
No, I'm thrilled. I love seeing a mixed bag in here already. This is all
John,
over the
people just
country.
want to see you present your deal.
I'm just pumped to be here with Thad and Noah. What's better than that?
What's happening, Dirk? Thanks for the message. Good to see you. Good to see lots of you. I think we're actually perfectly on time. So why don't we kick off the inaugural episode of the smartest hour in self-storage? Welcome, everyone. I'm fired up to be here. I think today is a huge, huge, huge day for us. And we're thrilled to be joined by John Lindsay and Thaddeus Campbell to walk through some really interesting stuff. I think that today will blow your minds. And today, I think, is the culmination not just of 3 years of work on the TractIQ side, but it's the culmination of a vision that I've had for close to a decade. So I'm really excited to show you guys. I want to quickly set the stage for the agenda of this webinar, and we're going to dive into it. So first, I'm going to hit you guys with three things that I think underwriters get wrong. We're going to hit you right off the bat with three contrarian stats. It's the smartest hour in self-storage. So we'll start off there. Then John and Matt are going to walk through their listing in Cape Coral, Florida. They've got a nice portfolio that we're going to dive into. And John is going to take the floor and explain why he thinks it would be a good opportunity for some folks. Then Thaddeus and I are going to take John's OM and we're going to build institutional grade materials on the fly. So bear with me. We're then going to kind of have some reactions from Thaddeus, John, and Matt. And then we're going to open it up to Q&A to all of you. And we have a challenge at the end of this that we're excited to launch. So this is going to be really, really fun. And I'm excited to have you guys. So with that, why don't we go into three contrarian stats that none of you on this call know? So the first is rate discipline. REITs from 2023 to 2025 cut rates 5x more than independent operators. And when I say rates in this case, we're talking street rates. I think that's pretty incredible. The second is that payroll is the largest operating expense line item for CMBS facilities. And it's almost 70% higher than taxes on average. So I think that's really interesting. And then the third, we've talked about the Sun Belt. We're here down in Texas. Everyone's fired up about the Sun Belt. But the West Coast actually has 44% more NOI per square foot than the Sun Belt. I think all that's pretty interesting. And let's see here. Marina and Nikki, am I having an echo?
We don't hear one on our end.
We don't either. I saw the chats, but I think we're
Okay,
good.
great. Well, with that, I'm going to stop sharing my screen. John Lindsay is going to take it away for the next 5 to 10 minutes and explain a little bit more about his deal in Cape Coral. John, go for
Yep.
it.
Hey, thanks for having me today. Super pumped to be here. Been a big fan of what you guys have been building for years now. Love to see it. For those of you who don't know me, first and foremost, John Lindsay, co-founder and president of Lindsay Self Storage Group. My family's been in the self-storage industry since 1969. Originally developers, we've bought, built, sold, brokered all over US, Europe, Southeast Asia, and Latin America. Traded deals, Waxahachie, Texas, Ho Chi Minh, Vietnam, the Netherlands, France, you name it, everything in between. So got a pretty broad reach of storage expertise and knowledge. I'm now based out of the great state of Florida here in Tampa, originally from North Carolina. And super excited to chat with you guys about this deal today and check out what Noah, you and the team have built, see what you guys got going on. I'm always blown away by your new products and services. And here, though, we are talking about excess storage and 9-store portfolio in Cape Coral, Florida. It's about 93,000 square foot portfolio combined of traditional climate controlled, some interior non-climate as well, and even a few office spaces here. And I was actually really excited to talk about this deal over, some of the Class A stuff we've sold in the Nashvilles and Raleigh Durhams of the world because those are easy. Everyone likes those. They're trophy institutional products. There's nothing not to like about those assets. What I think is really cool is diving into the data and the details of some of these submarkets where we've seen some controversial takes between Fort Myers, Cape Coral, and some of the other markets of the world. And we're going to take a look at how we can really dissect this deal and see kind of the pros and cons of this portfolio moving forward and where someone may be able to come in and create some heavy value day one. And I think what's really interesting, and we're going to see as we dive into this, the difference between a Cape Coral versus Florida, just like Fort Worth and Dallas or Raleigh and Durham, there is a huge difference in the market we're looking at, some of the growth we're seeing there as well. And for those of you who are not as familiar with the market at large, I will give you a quick high level here. So Lee County is the third highest migration county in the state of Florida. It sits halfway between Tampa and Naples on the west coast there. Roughly about $1 billion of residential going in right now. So there's a massive push between Naples moving north and Tampa moving south. We're seeing a huge influx of new construction. There is also some large developments super close to proximity of this storage portfolio, which is, as I mentioned, 9 stores. 8 of them are within a half mile of one another. There's a $500 million mixed use development going less than a mile away from here. So we're really excited to dive into this, run through this in a little more detail. And, as I said, we're going to give you a really big high level of some of the product here, this single owner operator portfolio that I think really has some operational efficiencies, some rate opportunities, some online marketing and advertising opportunities. And Noah, to be quite honest, I'm excited to see what your data has for us today. And myself and Matt are both available to answer questions to see if we can get going here.
Yeah, and John, what is the list price for the portfolio today?
Yep. So we currently have about 7.95, which is about a 7.2 cap going in on trailing 12-month financials. And that stabilizes out to about a 10 plus cap by year 5 from our numbers. So again, I think you're going to see some operational inefficiencies that could be cleaned up, some streamlining, a lot of rate movement that could be done here. And I'm excited to see how this compares to the data that y'all have.
I have
Okay.
newfound respect for you as a broker, John, of finding a seller that was willing to list a property at a realistic price but a 7.2 cap. We haven't seen many of those lately.
Yeah, I appreciate you saying that because I do want to say, we've seen some stuff trade super aggressively this year. We just sold a 4-story Class A in Raleigh, North Carolina for a sub 5 cap. And so we're seeing,
Yeah.
bigger groups starting to pay more aggressive prices, but we priced this the way we did to reflect some of the points that we are going to see for this market. It's not perfect. Every market has pros and cons, but we priced at a point where we think that this, certainly justifies some of those things, some of the contrarian points we've seen pop up. And so I'm excited to kind of dive into the specifics of that and help answer some of those questions surrounding that.
Okay. So let's take a quick pause for a second. And can everyone see my screen in TractIQ today? Okay, great. So 3 years ago, I asked the question, how can we automate an investment memo and an investment model in minutes leveraging ChatGPT? And this took us down an entire rabbit hole that eventually culminated with us buying TractIQ, committing to no longer buying properties, and building the best data company in the industry. And what's really cool about today is I think we now have the capability to truly automate an institutional grade memo and model in 15 minutes. So what we're going to do, like every OM that a broker puts together, right? They're going to paint a really good picture. John is no different. We want to dive into the data and actually see what we could do by building an institutional memo and kind of ask questions to John as we build this together. So let me first, it's going to look like maybe something you guys haven't seen before, but I'm going to move a little quickly so you guys can kind of get the sense. But today we're releasing an AI connector. So what this means is we're going to port all of TractIQ's data into any AI workflow of your choosing. So right now I've got my Claude pulled up and I'm saying, okay, using the attached OM and the TractIQ AI connector, let's generate a full memo for this deal. Okay. So I'm going to hit go. And while I'm hitting that, and this is kind of going to show what I think the workflow of the future is going to do. I'm also pulling up my institutional grade investment model. So this is a 10 plus tab, fully dynamic institutional Excel model. I also have my Claude in Excel, which is a Claude Excel plugin. And I've got this sheet here looking at rates in the last, let's see, 3 years in Cape Coral. So let me also get that going at the same time. Okay. I've now got my memo going. I've got my model going. I do want to, while those are all rolling, you can kind of see how it's going, and it's pulling data directly from TractIQ. While that's going, I want to pull up another tab. Okay, and just bear with me. Now in this other tab, I'm in another Claude window. Okay. In this Claude window, I'm going to show you guys what the heck the AI connector is. So here, I'm going to now type in, give me a complete lay of the land for Cape Coral, Florida, using the TractIQ AI connector. Okay. And I'm going to do the same thing in ChatGPT at the same time. Okay. So just bearing with me, I've got my memo going in the first Claude. I've got my model going in the other tab. I've got, you can see Claude is pulling the market summary tab, the demographics tab, the pricing trends tab here. And ChatGPT is also pulling all the tooling from TractIQ at the same time. Now we're going to kind of investigate Cape Coral. And I also think this will be a cool opportunity to compare Claude versus ChatGPT. So for the AI connector, we have basically combined all of our data sets into any AI workflow. So this includes a market summary tab. It includes a demographics tab. It includes a pricing data, all of our CMBS data, all of it, so that any AI workflow can actually pipe into our data directly. So you
No,
can
I'm
see
going to
here in
interrupt you for a
Claude.
second. Somebody in the chat just asked a good question. How do they have to enter their login details to be able to make this happen?
Yeah, you would have to connect to the TractIQ AI connector. If you're a customer, you can log into your dashboard, and there's a really great help center article that walks you through it. But here is the first thing that this built.
Perfect.
Okay, so you guys saw, here's Cape Coral's market. We're looking at the 5 mile trade area. Let's see what data we pulled. So we've got, looks like 26 operating facilities within 5 miles. We're looking at most of the facilities have climate control. So climate is table stakes here. We're looking at pretty large amount of supply potentially coming into this market. So John, we're going to talk about that. Demand fundamentals, really, really healthy growth. Median income on the lighter side, but we've got a lot of housing starts coming into the market. We've got a 24-month pricing trends view pulling in from TractIQ. And unfortunately for John, rates are down significantly over the last 24 months and even worse over the last 3 years. So we can kind of talk about that. But you can see in an instant, Claude is pulling this data directly from TractIQ. And then I've also got my ChatGPT that's doing it, I think, in a slightly worse way, because I think Claude is better, but still, right, now pulling in all of TractIQ's data and kind of giving an executive take of the market between Claude and ChatGPT. So the first question for John is how do you think about the incoming supply in this market?
Yeah, so I mean, this has slowed tremendously nationwide. We're all aware of that. A lot of it has been absorbed in these over gluttonous markets there. It's a big percentage here, but it's only about 130,000 feet. It's really not that much product coming within that. And when we've got over, 900 million, close to $1 billion of new residential coming in, I think it's a bit of a moot point, especially when you see the legacy occupancy of a store like this. New product coming in isn't too much of a threat with that much resi going on, particularly with the new project coming in within a mile of these locations there that should be over $500 million of multifamily, a new hospital, new hotels, things of that sort. So although there is new product coming in, it doesn't
Is
really
that
scare me.
this Cape Coral Grove, John?
No, it's actually not. Is the Bimini Square project.
Gotcha.
Yeah, and it's still in planning, so it might not be fully up there. But one of the things we love calling the county. I mean, old school. You got to call the county and see what's going on, get a little insight into what's happening. So
Awesome.
I,
Okay.
I Noah, you pulled that the dot you touched, and maybe my favorite aspect of TractIQ. That's a $1.2 billion project in final planning inside of.
yeah,
I think that's a 5 mile radius you had mapped out. So
Yep. Agreed. I did see that project, which I think is good. I want to give folks live updates. All right. The Excel model has auto-populated rates in this market for the last 36 months directly into my template. You can kind of see all of the historic pricing trends. Rates, unfortunately, are down 50+% in the last 3 years. But what's the flip side of that? It means that if you're underwriting to today's current rates, right, and the deal pencils, right, your thesis could be that you're at the bottom. But kind of wanted to kind of show that, all right, we built this pricing sheet, and we've also built this market overview sheet that kind of pulled in all the demographics, pulled in all the facility information. And what I want to do now is, can we build a new supply tracker of self-storage for this deal? Okay. So you guys just saw my rates done in probably 60 seconds. Okay. And this is all live as you can hope it to be. I'll also, for being transparent, I want to show you guys here is where we are with the memo. So when I first pushed this, again, we typed this in. It asked me a question of like how to build the memo. And we actually have a skill called a competitive benchmarking skill. So I said yes. And now it's actually pulling in all of the data directly so that we can build the memo. And it's kind of asking me some permissions here. So while that's all going, I want to flip back to another workflow that we have running, which is back in our Claude here. And in this case, I'm also asking it to pull some CMBS data and stuff. So the point of this, right, in a real world, right, you can do this with multiple deals at the same time. And I've got workflows all going while I'm managing a webinar with hundreds of people on it watching us live. So I think that the next question, John, for the facility, where do the achieved rates stand in relation to the current street and web rates of the market?
yeah. So you'll see that they're wildly below a lot of their competitors as well. I think one of the inefficiencies that we've seen in this operator is just, with the advanced competition we're seeing come into the state of Florida, it's just hard to keep up with the dynamic pricing we've seen and the aggressive ECRI pushes. But before we hit that note, what I really want to tackle, as you mentioned earlier, some of the extreme pricing shifts we've seen in the market. Like you mentioned, almost down 50% over the last 3 years. And I think it's actually an important point to hit. We had Hurricane Ian in 23, which just absolutely decimated Cape Coral, Fort Myers area, Sanibel Island gone. And when that happened, we saw street rates almost hit $30 a foot in that market. There were people need to put their stuff in storage, and that's what really drove a lot of the new product to the Fort Myers of the world. And unfortunately, what came with that was a swift decline in rates due to oversupply in some of those markets. A lot of that was more Fort Myers than Cape Coral. And what I think is actually a unique point throughout all this portfolio's occupancy has stayed high, not only through that, but despite those factors that have come in. And there's no way with the cost of new construction, new product coming in, that those competitors could undercut and be successful of a portfolio of this caliber that's been in the market for 20 plus years. So I think it actually puts us in a great position. I think we're kind of at the rebound trough of where this is. So if you're underwriting this deal today, we've seen what the bottoming out of a market looks like. And we still have $1 billion of residential coming in. We still have these massive infrastructure projects, multifamily, hospitals, hotels, all coming in throughout the area. And this county, Lee County here in Florida, is the third highest migration county in the state of Florida. So I see a lot of green lights moving forward. And it's really interesting to take that into perspective when you mentioned that 3-year decline with the street rates there.
Okay, awesome. So another update. You guys can see my screen at the moment with the CMBS data.
Yes.
Okay, awesome. So I also asked Claude to pull all of the occupancy and achieve rate data within 20 miles of this facility and kind of hone in on a couple of comps. You can see here that it actually pulled Prime Storage's occupancy, the Storage King's occupancy, and some Storage Mart occupancy, and also providing some historical and current income, OPEX, NOI margin for all of these facilities. I think a couple of things that I'd be concerned about, right? Revenue is falling for these facilities, despite some occupancy improvements. I think we've seen a big NOI compression, NOI margin compression for these facilities in the last 24 months. And, so I think a lot of what we're seeing in the data so far is the market softening. And John, at the onset, didn't run from that in any way, right? I think that was the first thing that he addressed, was why that he priced the deal in this way. I want to quickly pivot to Excel, and you guys can actually see what it's doing. So moving to Excel, we already did our rate analysis thing. I then asked on the call to build a new supply tracker of self-storage for this deal. And I spelled storage wrong because, I make mistakes and I'm not an LLM. But you can actually see as we speak, Claude is pulling in this supply tracker for Cape Coral on the fly, and allows me to, there you go. So it's pulling in all of the facilities within, 5 miles of this trade area. It's pulling in the year built. It's pulling in REIT versus non-REIT versus sophisticated. It's formatting it for me while I talk to you here. You can see the owner contact information, the rental rates for this facility or for these facilities, and all of that while I'm working on multiple workflows at the same time. Thaddeus, I want to bring you in. You've seen a little bit of data so far on the deal. John has wowed us with his charisma and his awesomeness. What are some things that stick out to you so far on the deal while we're looking at the data?
Okay, three things I want to say. Number one, you said you and I were going to build this, and you scared the crap out of me because I wasn't going to build it at all. I'm not contributing at all. Watching what you're doing is incredible. I'm still sort of shell shocked at the 7.2 cap listing price, quite frankly. And to John's point earlier about Cape Coral and Fort Myers and the supply, my first company I worked at, we actually had a project under contract, a piece of raw land in Cape Coral, but right before Hurricane Ian. And the rates that were happening in that market, even before the hurricane started pushing rates up, were impressive. And the reason I bring that up is that there's reason to feel, if I was underwriting this deal and I was looking at buying it, I would want to go back to 18, 19 and see what the market looked like. I would want to pull that far back because I'd want to see pre-COVID. Was it just the COVID boom? Because we were underwriting that ground up development to $25, $26 rents in 2023, right before Hurricane Ian went through. Why do I say that? Well, that market historically has hit really strong rental rates, significantly above what's happening right now. So I think for this to be priced at a 7.2 cap, yes, there's some incoming supply pressure. And we certainly want to make sure that we go and find out exactly what's happening with those ground up development prospects. But there's reason to think that this deal has some legs to it, given the historical success in the market, what rates could be, and the way it's priced on what's actually happening right now.
Yep. I think that's a great question, and I want to answer it. The first is you can kind of see that it's completing its supply tracker in this market, doing a full audit of the construction pipeline, looking at existing versus incoming, looking at pricing. And again, the amount of context I gave it was actually pretty poor. I think with AI and these tools, they're much better when you give it a ton of context. In this case, I said, can we build a new supply tracker of self-storage, spelling it wrong for this deal? And you can kind of see what it does. So while that's still going, I want to flip over to some other workflows here. And I kind of want to show you guys where the memo is looking. So first here is Memo's made a lot of progress. It's pulling all the data for the facility. It's currently got all the trade area summaries. And we're going to go through this memo, by the way. And I think with anything in AI, you can actually see it's building here's the summary of the memo right here. I think what we're going to do now, because I think this is really important, all this stuff needs to be human reviewed, human scrutinized, human diligenced. None of this should be submitted to your investment committee without someone qualified reviewing everything. So I think with that, why don't we quickly see what this deal shows?
No,
And
where's your sense of adventure, man? Come on.
so
there are a couple
yeah.
of Q&As before you jump into the next. Do you mind taking a look real fast?
I think RK, you asked a great question.
That doesn't sound like RK. Could someone read me the question? I think there's a lot of
Are
stuff.
these web or walk-in rates? Walk-in rates are irrelevant, he says, and he wants to know what the web rates are.
Yes. So why don't we've been focusing on street and web rates. Why don't we see what's in this memo? And then we can dive into the web rates as well. And in my view, RK, walk-in to me is street rates, and web rates being the online rates. Usually the street is the one that's crossed out, as you know. So let's just see what this memo looks like. Then I want to go to the Hurricane Ian context because I've got an answer for that question. So you can see here, we've got an executive summary of this deal, 9-property portfolio offered by our fabulous partners at Lindsay Storage Group, concentrated in a couple of trade areas, looking at 80+% occupancy. You can see the data tells a cautious story. Both the 5-mile trade areas are mildly oversupplied and dominated by REIT and sophisticated private operators. Within the past 36 months, the 10 by 10 street rates in the trade area are down between 50 and 60%, falling by almost $1 per square foot. And then, looking at some occupancy softening in some of the CMBS facilities, it's pointing out, the pipeline, a ton of supply that I think John has talked about. So pulling in some really interesting information. Again, we have a memo skill, but I haven't reviewed this yet. So it's kind of showing a snapshot of each property, the year built, the net rentable for each one, kind of a profile, the portfolio economics of the deal, pulled in, John, from your OM, the T12, the adjusted, the year 1 and the year 5. And now let's see what else it did. So you can kind of see it did a demographic analysis here, looking at square foot per capita, REIT share percent of the market, population growth, crushes the national average, but also the REIT share of the market is double the national average. So very, very concentrated with institutional groups. Median incomes is kind of in line. And then it's a little bit down on the renter per share of the market. And it did a full analysis here. John, anything you would want to react to in this demographic analysis here?
Yeah, well, actually, it was something above real quick. Now, if you can pull up to the last slide you showed there. You mentioned right here. Oh, scroll down. The 48% expense ratio or the NOI ratio there.
Yeah.
I think something that we'll see, and I saw it when you were kind of scrolling through the data, some of the CMBS stores had showed a much larger NOI ratio. And I think what you'll see in analyzing this deal is that there is a lot of fat from an expense side that we see when it's a smaller single owner operator here. So I think there's a ton of operational efficiencies to be captured on, but I'm excited to see kind of in your data where it pulls up against some of that CMBS comparison there from an NOI OPEX ratio comparison point.
Yep. Yeah, I'm curious to see that as well. So let's see if it pulled any of that in. We kind of went through this demographic analysis here. So now it's kind of doing a competitor set, and it really leaned into the operator dynamics. I would say when I was investing in storage, I made a lot of mistakes. I did some really good deals. I did some not so good deals, and I'm transparent about that. I did not appreciate how the competitive set matters. Not just the incoming supply, but who are you going up against? Ideally, you want to go up against people that don't look at rates every single day. This portfolio, you can see REITs kind of dominate 50% of the square footage, 48% of the facility count, and then you've got sophisticated privates, which to us, the Primes, Storage Mart, 10 Federal, these are groups with 15 or more locations. So kind of call it 82% of the square footage in this market are REIT dominated or sophisticated dominated. But that's also why this. But yeah, John, how would you describe the current operations of the facility?
So I actually love this point a lot more than you think. A lot of these REITs that we've seen go into Cape Coral and Fort Myers in particular were built in the last, 5 years or so, call it. Anyone who's built storage facilities recently knows exactly how much it costs to go vertical these days. It is quite expensive. Not only were these assets built in the 90s, being now offered at 85 bucks a foot, significantly cheaper than what you'd go build newer product at. So even though you may not be able to peg the rates, you can peg below them and be in a much more efficient cost basis with these assets. So there's a lot more wiggle room when you're buying product at 85 bucks a foot with existing cash flow than there is building brand new at 120 to 140 bucks a foot. So I actually like that there's a heavier REIT presence here. And I think, again, we have a ton of data to pull from as we're moving forward to see kind of where we think these rates can actually go.
Yep. Awesome. So kind of going down the memo, you can see it pulled the street rates over the past 36 months. Let's make sure to include the web rate trends in this market as well. And shout out RK. Okay. But you can see we kind of talked about the rate story. This market has been hit really hard. I kind of want to look at the hurricane situation, but we're also kind of looking at some CMBS facilities here, so doing some more supply analysis and kind of some strengths, weaknesses. So this is I'd say a draft one of the memo. I think there's a couple of things that I want to see. The first is I want to see the CMBS facilities achieve rate per square foot. I want to make sure we include the web rate trends in this market. And then can we see a replacement cost analysis comparing the subject price per square foot versus what it would cost to build new? Okay. So now that that's rolling, I want to come back and let's talk about the hurricane because I think this market has been impacted significantly. I asked Claude to look at the rates since Hurricane Ian. And John, is there any context that you would want to provide on this weather situation here?
Yeah, well, I mean, anyone who's not lived in a hurricane state or has experienced it personally, it can be pretty brutal. And Cape Coral, Fort Myers in particular, was hammered with Hurricane Ian. And then obviously 2 years ago here on the west coast of Florida, we also had Helene and Milton back to back. We see storage rates usually spike around hurricanes because people need to put their stuff someplace. It happens, and I think particularly after we saw the large Ian delivery in hand with that was a lot of new product that was approved in 21, 22. Then with Ian in 23, we kind of had this huge falling out of rates with move outs from hurricane, new product being delivered to the market, huge drop in occupancies. And so I think it'd be really interesting to see where this comes back from. Again, I feel like we've kind of leveled out. You can see it here. We kind of hit the bottom of this trough. And if you're able to buy at 85 bucks a foot in a market where we've seen these rates finally plateau out, I would find it very challenging to see them go anywhere below this. I think we're in a really good position with all the residential income and new developments going in that we see this continue to climb and occupancies come back as well.
And add some context to that.
Yeah, go for it, Thaddeus.
I mentioned off camera, I think that, or I might have mentioned it on camera. We were under contract on a site in Cape Coral. Actually, I did mention it on camera because you just confirmed what our rate assumptions were, which made me feel good because that was like 3 years ago and I'm old and I forget stuff. But what I want to say is we were under contract on that parcel. I think it was 5 acres for like $2.4 million, which from a ground up development standpoint is a lot of money to pay for dirt for was going to be a single story facility. To John's point, what that would cost us from a cost per square foot perspective today to actually get that facility open and functioning, the rates we'd need to get to make that meet a pro forma that could get bank financing and raise equity, that you're not going to be able to get to that today, right? So some of that supply that's there, quite frankly, it won't get built in the next couple of years. It just can't. They won't be able to get a bank to okay what it's going to take to get a loan to go get a construction loan on it. So that builds into John's point some natural protection. Now, when you also map out, what the prices are in excess storage today and the room they have before a new competitor would be able to compete with them, that's attractive.
Mm-hmm. And I think this is making a really good point here about when you have extreme weather events. I mean, you can see like post Ian peak, the rates were typical for what you'd see in Manhattan and coastal California. They reflect classic post-disaster storage surge dynamics, thousands of home meeting storage, et cetera, right? So you can make the case that rates are artificially high in this market for lots of reasons, whether it was COVID and or the hurricane. And now rates have returned back to normal, or at least back to pre-COVID norms. And like actually is kind of suggesting a narrative change, right? Of instead of rates declining by 26%, it's Hurricane Ian created an extraordinary demand surge that drove rates to roughly 2x the typical Florida market levels. And the rates have been mean reverting ever since. And what kind of doing an analysis here to kind of help you like understand what we're seeing in all of the data, I think is really, really awesome.
Yeah, and no, I'd love to, I think I remember back, 2018, 2019 rates were probably back in that, $1.20 to $1.50 here. So I mean, I do see if we could see the other side of that peak, it's almost a perfect bell curve, I think, around that Hurricane Ian there. So it's really part of that larger picture that needs to be told. If you just look at the data without a lens to look through it, it doesn't really make much sense. But again, I think with what we're seeing come into this state, and anyone who kind of understands the dynamics of the west coast of Florida, with Naples pushing up and Tampa pushing south, we'll see kind of the future of what that market looks like over the next 5-10 years.
John, just to reiterate what you said there, I pulled the previous years before Hurricane Ian. It's exactly what you just said. So, yeah. And I did use TractIQ to do that as well. So I think, no, you probably could pull that too.
That's right. So we have a couple of questions that I totally, in my context switching between 6 different tabs, I ignored Nikki and Marina pinging me. So here are a couple of questions. What is the center point ChatGPT is using to determine its 5-mile stats? Can I instruct it to use a specific address like the one that John gave? Very good question. Yes. When you ask in Claude, it'll geocode the address that you give it. So if you give it a specific address, it'll geocode the actual address. If you ask it to do Cape Coral, right, it will pick the center point of Cape Coral, and it'll also tell you where it does that. So all of those, it gets actually geocoded in through our tooling, which is really, really cool. In terms of occupancy, NOI, CMBS data, yes, all the CMBS data can now be piped in directly via MCP or via AI Connector. So that is included if you're on the Pro Plus or the Max plans. The key differences between what's an AI connector or an API, great questions. Ethan, I think, would be proud of me. And I would think the AI connector is actually what's called an MCP, a model context protocol. An MCP is an API for large language models. So the MCP connects our tools that we make available, which are basically to our data, to any AI workflow that includes the model context protocol. So that's ChatGPT, that's Claude, that's Copilot. I think the only major one that doesn't have it is Grok today, but I think they're working on it, and we'll certainly have that because this is where all of the future is happening. John, you asked a question of the rates. So and then I also saw RK asked another question for the model. So I want to flip to that and kind of like dive into the hurricane really quick. So once you guys started asking some of these questions, I then wanted to just like dive a little bit deeper, showing how rental rates change after Hurricane Ian. And you can see how it's still kind of going on, but we've now pulled in the pricing data since 2022 versus in Claude, it only pulled the last 36 months. RK, this model that I updated also pulled in, I didn't go through this. It also pulled in the unit mix. I also pulled in a pro forma of the facility and even had it build John's pro forma versus a rebuild using our market rates. versus an operational lift, and kind of like scenarioed this out. I also had it model returns, leveraging John's OM, our rebuild, and then some lift assumptions. We've got a sensitivity analysis here of like what the returns would be based on exit cap rate, all in the same workflow. Well, we've got Ian and, it kind of, can you fix the formatting, right? All in the same model. So when I uploaded this in, it pulled the data from the OM, meshed it with the TractIQ data, and fully populated my Excel model on the fly.
Unbelievable.
Okay, so let's go back to the model, the memo, while this is building, and let's see if it listened to us, right? And I think we've got another 5 minutes of this before we wrap up and go to kind of takeaways and Q&A. So let's see if it took my feedback into account. Same kind of trade area analysis here. We've got the competitive set here. Let's see, pricing trends. Here we go. Now we've got a street versus web rates analysis here. You can kind of see the discount rate between street and web, right? So it pulled in that per RK's feedback. And, web rates have compressed in parallel with street rates. And there's about a 20 to 30% gap between web and street rates in this market. And obviously, if you're underwriting move-in rates, using the web is potentially the right thing to do. We then also pulled in achieve rate per square foot versus of XS's facilities versus some CMBS. It did it in monthly, so I wish it did it in annually, but you can kind of see that analysis. And look at this. Okay, so I haven't seen this. I'm live with you. Here's a replacement cost analysis of this deal. Let's just go back to it. So you can kind of see it did the strongest argument for this acquisition is not the rate growth story, it's the discount to replacement cost. Using current Sunbelt construction benchmarks, shout out some GCs here. We've got a low replacement cost at $94 a square foot up to $159 a foot. And you can kind of see the bid versus mid, the basis case in the deal. And kind of it's coming out with, you're looking at 30+% or so below replacement costs to buy this facility. I would suggest if you're buying this one, invest in CapEx, probably some new paint, probably some new signage, probably some new security, right? All those things that John can tell you more about. But again, right, here is a replacement cost analysis. I'd want to dive into the assumptions used here to understand like the GC construction cost data. Where is that coming from? How do I know it's right? But here is a 16-page beginning of an institutional grade memo with my model and all the other Claude stuff. So I think with that, I'm going to take a chill pill. We're going to take a little bit of a break. We're going to decompress. We're going to take a couple minutes to reflect on what the heck we just looked at. And then we're going to open up to Q&A. And then I've got a special competition that we're going to announce at the end of this. But John, Thaddeus, Matt, what do you make of, let's start with you, Thaddeus. What do you make of what I just showed you?
I want to ask John a question. When you, John, call a potential client, somebody's called you and said, hey, here's my buy box, send me stuff. And you send them stuff. What's the thing that they're going to do that's most going to make you want to keep sending them new deals?
Honestly, the open line and feedback of communication. Nothing worse. We send a lot of stuff out. We talk to thousands of people every month, and there's no feedback. There's no open line communication. They ask for things, but they never get back. Like, we need feedback, or else we're not going to really get things going around. And I think too, the more level of communication, whether good or bad feedback in general is just welcomed when we're going through the heavy exercise of lifting, getting things out. And to be quite honest, with these tools at your fingertips now, I mean, holy cats, no, you said you scared your team building this. I see why now. This is an unbelievable machine you have put together. And I am wildly impressed with what you guys have been able to do in such a short period of time. I think this is going to continue to blow everyone out of the water as they dig further and further. I mean, we've scratched the surface in the past 30 minutes, and I don't even think I've had time to digest what you've been able to put out here.
as someone on the other side of the equation who's getting deals sent to me, a lot of times it's not the lack of desire to give you feedback. It's the lack of ability to get to a really good ability to give you feedback on every deal that I get put in front of me. So my biggest takeaway right here is how much more communicative can I be with brokers that are sending me deals when I can get this level of feedback this quickly on this many deals. I'm only gonna. I was speaking to someone earlier today, and they're like, the biggest thing I'm working on right now is filling my pipeline more. Well, how do I fill my pipeline more? I have people send me more deals. Well, how do I get someone to send me more deals? For most brokers, it's give them better feedback. And so that's my big takeaway here is what an ability to go really give someone a real data backed take on many, many deals quickly.
100%. Well, I think
I
that
think,
you may. Oh, go ahead. No, I'm sorry.
please, John, you go. I talked enough.
I said that whether it's with a broker or you're the seller or the bank, whatever, like what a cool opportunity to be able to pull all this data and really kind of chew on the nitty gritty here. And I think there's probably a lot of things that we know conceptually about some of these markets or some of these deals we look at, but to be able to pull this data in 17 minutes and to comb through it and really get to deep dive into it, I think really helps validate some of the thinkings we have about some of these projects. So you might say, I feel like this market's, oversight, or I feel like, and we know because we've looked at thousands of deals, but it's nice to have that validation piece instantly like that. And I think this is going to help a lot of people really speed up their process of analyzing projects.
Yeah, I think it,
I hope
like,
nobody invests in TractIQ and starts buying this data platform. That's nobody do it. Nobody use this at all.
I would say, like, in reality, right, this is the culmination of years of work from TractIQ, but it's the culmination of this new technological era that we're in. I think a lot of people have been disappointed by AI in the last number of years. It gets things wrong. Maybe it hallucinates now, right? With like what things like TractIQ are doing. We're providing structured data designed for this, and the LLMs have gotten 100 times better over the last year. And every facet of our business now is impacted by this workflow. And I think, like, what's the point? Like, why does this matter? Oh, you can go a little faster. I think John and Thaddeus, you were kind of hitting on the head of, like, the communication across the industry can 1,000x, right? Like, to your point, how many times, John, have you sent a deal to someone that says they're interested and they never get back to you? Is that because they're a bad person, or is that because they just genuinely don't have the time? Maybe some people, but like, but we don't need to go down that path. But like, in reality, I think my contrarian take is, like, people have always thought that deal flow is the differentiator, data is the differentiator. And I think what this provides the industry is genuinely, I think, a level playing field against the REITs. They have more operating data, for sure, but they're not allowed to use this. They are not approved unless people are on their personal accounts using it. They're not allowed to pipe public storage data directly into Claude. They're not allowed to pipe their data. So I think the advantage right now to groups that kind of activate, it's kind of insane. And I think our customers have said so much profanity to us about how amazing this is in the last month, which I won't share exactly on this call. But I think with that, I want to go into some Q&A, and then we're going to talk about the competition that we have for you guys. But John, Matt, you guys rocked it. Thaddeus, you're awesome, and you look really pretty. First question.
No, I'm married. You got a brand new newborn.
First question I see here is, can you use this to compare deals? Yes. I kind of just asked it to compare Cape Coral versus Orlando. And again, you can customize the analysis, whether you're in Claude or ChatGPT or what have you, right? But you can see, how does this compare to Orlando? Orlando is a little bit more oversupplied. There's a little bit more in the pipeline, right? Here's the rate comparison that I just pulled of Cape Coral climate versus Orlando climate. And you can kind of see that Cape Coral has declined 55% in the last 36 months, while Orlando has dropped by 27% in the last 36 months. So absolutely, there is no, you like, unless the data does not exist, or you try to do an analysis that would eat up like all your usage, there is no question that it won't try to answer. So I think the really important thing to do is make sure if it's giving you a response, you ask it where it pulled the data, you understand and make it defend itself, right? I can go into that memo and say, can you show me how you built this exact chart? Send me the Excel of this chart so I can tie it back, right? I think that is where we need analysts. That is where we need people like John and Matt and Thaddeus and myself. You can't let it run wild and just send everything. It needs a person. And now if you can do 100 memos every week or two, right? You need people to do that, right? Like it's so like your capability has 100x, and I hope that empowers all the folks to be able to do stuff like this.
Well, no, I one thing on that, I encourage my team all the time, and because we have been very, very, very AI forward since this came out, and I think it's something that we've really leveraged. We've been a cloud firm since 2012. We've been kind of trying to be at the forefront of the tech, and something I always encourage our team members to do, and anyone using any AI product, is to challenge it constantly. I always tell my team, I'm like, hey, bully the AI, ask it questions, like push back on it and see the type of response it gets. Because sometimes they'll say, oops, you know what, you're right, I made a mistake. Like that's not pulled from the right area. So I think in some of these instances, when you're comparing deals or looking at questions, or you feel like some of the outputs may be incorrect from certain areas, like don't be shy to have that honest conversation with your platform or product and push back on it. Because one thing that a lot of us who have seen chime in, been in the industry a long time, we know what the correct output looks like. So we're not going to inherently just blindly trust every little data point. And it's fine to push back, because the system will have that fluid conversation with you and continue to improve through those conversations. So I'm really glad you brought that up, because I think it's a very important thing to bring up as we start to use AI more and more day in, day out through our conversations.
I love it. We're gonna still go to some questions, but I want to kind of wrap up with some ground rules, and then we'll and some takeaways for the next webinar. So we want to see what you guys build. So we're doing a competition, and for everyone using the AI connector, we are scratching the surface of what you can build. It's not only investment memos, it's not only models. You can build a CRM on top of the MCP, the AI connector. You can build an email automatic schedule that pulls in market data from TractIQ and targets emails. You can build infinite amount of things. We've already seen our customers do that. So we want to see exactly what you build. So from now until June 5th, all you need to do is send an email to support@TractIQ with a description, a screenshot, a file, or a link of what you build. We're going to comb through all the submissions. And then our next webinar on June 18th at 1 p.m. Central is we're going to give you 10 minutes to show what you've built. And I think with that, this recording is going to be sent to everyone. We're also going to send you the model. We're going to send you the memo. We're going to send John's OM. So if you're interested in this deal, some of the best deals are the ones that other people are too lazy to dive into because it doesn't meet perfect. I think John's purchase price here and the opportunity that this one has, you're honestly like, it seems like an interesting opportunity. This is not investment advice whatsoever, but it cash flows from day one, right? So do you want an asset that cash flows from day one, or do you want an asset that doesn't cash flow for 2 years, but their market dynamics are much, much more favorable? I think pick your poison. But I think we still have a bunch of other questions. But before we do that, Thaddeus or John, anything that you'd want to add in?
No, I mean, I'm blown away by this. I cannot wait to dive in personally and take some more time digesting everything you just laid for us. I mean, this is the coolest self-storage AI product I've seen come out, period, since AI came into inception. So I think you guys are crushing it. I think everyone should take full advantage of this. I know it's a lot to digest, but as we talked about earlier, Noah, there is so much with AI coming out, and if we're able to utilize it and capture it, I think it's going to help us advance that much more quickly. So the more we tinker with this, the better it gets. So I'm excited to see what everyone delivers for the next podcast. And thanks for having us on as always. This is awesome. What a great squad here.
I love it. Thaddeus, anything you'd want to add in?
Everything he said, and I can still distinctly remember my first demo with you of TractIQ in April of 2024. And just to see what you've done with this site and the constant commitment to improvement, kudos. You guys deserve everything that's coming your way for sure.
We appreciate it. We're just getting started, but this is a seminal moment. We've dreamt about genuinely automating institutional grade memos and models for years, and piggybacking off Anthropic and OpenAI and the wonderful work that those companies have done, we're able to make that possible. There's some other questions here. So John Raffbor, thanks for the question. Do the charts and Excel fields have to be built with specific row column headers for the MCP, or is the tool intuitive enough to understand what you're asking and we still pull it? For example, do I have to say elevator versus ground floor if we're talking about upper level floor pricing? The more context you give the LLM, the better the output. And if you think you're giving enough context, give it more. It'll always do better. So I would say if you're asking for upper level rental rates, I would be more precise and say elevator or say non-ground floor, etc. We've built skills within Claude to make this go faster and use our branding and all that kind of stuff. No, you don't need TractIQ's branding. This will fit directly in your model with your template, with your font and your color scheme, right? It'll plug in, whether it's the Claude plugin or the ChatGPT plugin or Copilot. View TractIQ in this sense as empowering you with the data to do with it as you please. I have some good one-liners sometimes. Awesome. Well, I think there's some more questions like, will this work for other asset classes such as small bay, flex, industrial? You're absolutely not allowed to use it for small. Anyone who uses this for small bay, flex, industrial needs to get off this webinar right now.
And you
Right,
really want me
Thaddeus?
to leave? And you want me to sign off? I was going to tell you don't answer him. This platform doesn't help with small bay at all.
I would say we're hyper focused on self-storage. And I think like in today's era, this is a perfect example. You could go underwrite 100 deals today or this week. So, but I think like that's not like necessarily the best use of time just because you can. It's like, what are the right deals? And I think we view it the same way as focus is our superpower. If we decide to go build a flex industrial asset class, there's no rents that are like on websites every day, right? So how do we get rents? There's what's net rentable square feet? Like what's the product sizing? Like what even is flex industrial, right? Like there's a lot of questions there that we would need to answer and figure out. And that would take away our focus from self-storage. Like we're hyper committed to storage. That's where we started and that's where we're going to be for the foreseeable future. So that doesn't preclude you from using the demographics or the housing data or the commercial, right? For any other analysis, especially, it's piped into all your models and templates. We just won't have certain data sets like flex industrial rents, things like that.
It's incredible for flex industrial for identifying certain metrics that are key to a successful project in that field as far as demographics and growth. Obviously, you don't have the rate data, so you can't build these models the same way. But I use it to answer Kyle's question. I use TractIQ daily in underwriting potential flex projects.
Awesome. When and where is the next episode? So the next episode is on June 18th. We're going to have an awesome, another amazing broker is going to provide a listing. I would say that that webinar is also going to include the slot from you all of what did you build? We want to highlight one of you in that. It'll be less of me building stuff on the fly because, that's kind of stressful and anxiety inducing for me. So it'll be more about the deal. It'll be more about the underwriting. I think it'll be more about the finding deals process and being really intelligent with your time. and then highlighting you along with potentially some trivia and some other surprises. So that's going to be June 18th at 1 p.m. Central. Nikki, is everyone already registered for that, or do they have to register again?
They'll have to register again, but everyone who is on this call and registered today will get an invite to it.
Amazing. Well, I think that, why don't we call it a day for our first smartest hour in self-storage. I hope everyone got a little smarter, but thank you to John and Matt and Thaddeus for joining on. We're going to send out a recording of this webinar. We're going to send out John's OM. We're going to send out the model, the memo, and we are excited to see what you guys build. And if you're a TractIQ customer, feel free to reach out to us if you have any issues getting the connector set up. But we're excited to see what you guys do with it.
Thanks for hosting us always, Noah. Have a blessed day, guys.
All right, everyone. Y'all have a great day. We'll talk to you soon.